Uh, Medplus Health, that's the one that we'll be keeping an eye out on as well. They reported their Q1 numbers. The revenue of the company grew mildly. Its margins and EBITDA expanded during Q1 FY26. We have Gangadi Madhukar Reddy, who's the MD and CEO at Medplus Health, joining in with us to talk to us about their numbers. Good morning, sir. Thank you so much for giving us your time this morning. Let's start by talking about the revenue. I'm seeing revenue growth coming in at around 3.6% year-on-year basis. First, if you could start by just giving us a breakup in terms of the volumes as well as the pricing growth that we've seen during this quarter.
I would say, given that we have actually introduced a private label product last year around the same time, and private label actually sells at a price which is almost 50% of what the brand sells. So every time we substitute a brand for a private label, we end up actually losing some top line. And that's one of the reasons why you're seeing that the year-on-year growth is actually much less than what it should be. I would say that the volume growth is probably closer to 6 or 7% out there for us. In the normal, this thing, you would actually say that the inflation has actually, eaten into some of your thing and volume would be lesser. But in our case, given that the price of the private label is way less, and that is actually a significant number, amount of private label we sell, I would say that the volume is actually much higher than what the numbers actually show.
Mr. Reddy, good morning. Thank you for joining in. You mentioned you launched a new private label product this time around, but how much of that private label products are now part of your business? The entire business grew around 6% this time around. So what are you expecting the full year growth to be? And if this business is around 19 to 20% of your overall business, how much of a percentage increase do you see over the next couple of years, say?
So while I must tell you that the private label substitution definitely reduces the top line, it is actually more profitable for us. So even if there is a slight degrowth, I don't think we should really worry too much, because in real terms, the amount of money we make on our own label is double of what we make when we sell the brand. Hence, you're seeing that over the period of last 1 year, we have been consistently increasing our gross margin. Now, coming to what will be the outlook for our private label growth, we actually grew pretty significantly in Q4. Q1, we took a slight step back, as I had actually mentioned in the last call. So going forward, will probably be around the same or grow at around 1% every quarter in volumes. That is on the private label pharmacy side. So today, I think around 25% of all the medicines we sell come from the Medplus brand. And this within just a year of us actually launching. So we are obviously very happy with the way it is growing. But we know that this is largely because, the early adopters have moved in and bought the product. Now it is for the rest of the guys who are just sitting on the sidelines to actually convert. Probably be a little slower than the early adoption, I would say. So we'll probably grow at around 1% every quarter, maybe starting next quarter. So the 25% volume which we have of the medicines will probably go to 26, 27, and 28 as we go forward.
And how much is this private label business overall of your business, Mr. Reddy?
As I said, in value terms, if you look at it, in medicines, it's roughly around 14%. So 14% of our 6,000 crores would basically be this. So around 840 crores. This is on the pharma side. On the non-pharma side, it is 50% of all our non-pharma sales. So that roughly is around 500 crores. So you combine the both things, maybe it's around 12 to 1300 crores overall.
Okay. Mr. Reddy, what about your branded side of the business as well? I want to understand the branded generic side. What is the growth there? What are you seeing in terms of the outlook over there? As well as in terms of store opening plans, you all have a strong store opening plan and aggressive plan, especially for FY26. So, both these factors, what are we watching out for?
Sure. So our store opening plan, we had actually mentioned that we do around 600. We have actually grown by 100 net this quarter. Typically, our Q1 is slightly slower, but by the end of the year, we should easily catch up and basically make our 600 stores. So that will happen for sure. On the branded side, while, we are the best priced guys out there in the market, we continue to actually have the highest discount in both online and offline channels combined. I see us growing at the rate of the market, but little bit of cannibalization is going to happen for sure. Some of the guys who come into our stores who buy regular brands and all may get tempted by the lower prices which we have on our private label. Our private label sells at something like 50 to 60% lower than the branded products. So some of them will switch. So for us, the overall growth is going to continue, but I'm not 100% sure of how much conversion will actually happen, and so how much the actually branded products will sell.
Okay. And sir, given this store rollout plan that you'll have as well during FY26, what does it do to your margins, right? Currently, margins, I believe, are at somewhere at 8.5%. So for the year, will this 8.5% be something that we will sustain, or, any impact on that is what we're watching out for?
I don't see, given that the 600 stores are on a pretty large base of around 4,800 stores, I really don't expect that this to drag it down significantly. It may remain where it is because we continue to increase the gross margin overall. So I'm not too concerned about that, I would say. It'll probably remain the same or slightly go up.
Probably remain the same. Mr. Reddy, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. The management there of Medplus Health Services expecting margins to remain at similar levels or slightly lower. They're 1.5% down on